Good morning, people. Hope everyone is doing well. We had the inflation data this morning, right? We had CPI, the CPI report that came out that we were looking at with our live trading room here, looking for some of that upside. It just exploded higher, though. This was a very quick move to the upside, then it slowed down a bit. And rightfully, well, maybe rightfully so, right? Realistically, the inflation data did drop, right? Today is November 14th, Tuesday, where we had that CPI data 8:30 a.m. this morning. Labor Department released its report on the consumer price index for October, and a lot of the investors and traders were looking for this type of movement, suggesting that the CPI numbers would pull down compared to not only their expectations but the prior months. So let me just find these numbers for you guys. The CPI, US CPI year over year was expected at 3.3%. The prior figure was 3.7%, and it came out at 3.2%, right? The US CPI month over month at 0.1% expected, prior 0.4, and the actual 0% US core CPI year over year, 4.1% expected, and prior 4% came out, and the US core month over month 0.3 expected, and prior 0.2 came out. So drops across the board in the inflation figures, right, even slightly from the general expectations and the prior month. And what happened here is a downside surprise, right? People were looking at this on CPI, could spark another drop in yields and boost risk asset prices, which is exactly what we saw and what we got, right? Pretty strong pop to the upside. There are many ways in which progress has been seen with regard to price pressures, with the economy and labor market remaining on a solid footing, and headline inflation is down significantly from the 7% seen at the beginning of the year, and it will take additional time to go from the current 3% to the Fed's desired 2% target. So others also see as more entrenched, especially when looking at core inflation. The elimination of the pandemic and supply chain disruptions were low-hanging fruit, and underlying price pressures are proving stickier by showing some recent signs of stalling. There's also other risks that are not necessarily inflationary before we do take a look at the charts here and break down some levels and ideas. But U.S. House Speaker Mike Johnson's two-part stopgap federal funding program plan is set to face a vote in the House, with the widely expected it's widely expected to get blocked, right, said plan, and raising the risk of a partial government shutdown. So some hardline House Republicans are already against the plan, as it doesn't include spending cuts, while the White House also denounced that the proposal, with President Biden likely to vote the measure, the general deficit and political polarization in the U.S. are one of the main reasons that Moody's recent cut in credit rating outlook was seen, right? And some analysts do expect Moody's to eventually downgrade the U.S. debt too, as fiscal stability remains threatened by current political dynamics. Next week, what we have is, we have Thanksgiving. Sorry about that. We got Thanksgiving next week, which cuts the market time short for the week, right? Thursday markets are closed. Friday, I believe they're open a half day, so that's 2 days next week that the market's out of here. Today, we have Fed's Jefferson speech, right? We have consumer price index. We have Fed's Barr, Fed's Mester, and Goolsby all talking, right? Barr, Mester, and Goolsby are after the opening bell of the market, so that's going to be pretty interesting. Just Fed speakers every day yet again this week. So what I'm looking at right now, I'm on the S&P 500 futures after all of this news that came out, is we've seen that this market rallied extremely aggressively, pretty much a 60-point move from the bottoming of the report, right? So the report came out. We got massive, well, not massive, we got a massive move, but we got a slight, I guess, miss on the inflation expectations, which would be a beat, right? So lower numbers are bullish generally. So we got a very strong 60-point move in the S&P 100 futures here pre-market, pretty much at that 4,500 level. Right now, we've cleaned up the auction that was created late September. That was pretty weak. And the next real resistance is between 44, like 95, and 4,500. 4,500 being the upside target. Now, the way I see this is the low 70 area, 44.70, 72-ish, is a main area for the buy side to actually sustain with all that buying that happened in and around that level here pre-market and on the pullback. Anything under that, we're probably going to clean up the auction to the downside. So buyers, they're going to want to sustain that area. They're also going to want to sustain that like 47, 49 area very well. But as it stands right now, there are some resistances heading up, but it's looking like one of those days, right? We've escaped out of the balance that's been plaguing this market for the last few sessions since the beginning of October, I would say, actually, with those highs. And now we're looking for some of that continuation to see if we can get into a lot of that volume to the upside. So what we're going to be doing is opening our live trading room here and seeing if we can catch some of these moves, right? Seeing how this kind of shapes up. But a lot of this upside is panning out right now. A lot of people are looking at this, trying to fade this, but I'd be a little more cautious until we start breaking that high 60, low 70 area in regards to that downside press. So that's one of the main things that I'm looking at here this morning. Shorter update, inflation data is out. Throughout the rest of the week, we just have continuous Fed speakers, so keep that in mind as we go forward. And let's open up our live trading with our traders, and we'll see you guys in there. So thank